What are pro forma cash flow statements? Pro forma cash flow statements, pro forma means projection or looking into the future or what you anticipate your financial performance to be without making big adjustments. And it doesn't just take your revenue and say in year 1, year 2, and year 3, here's what our revenue is, here's what our expenses are, and here's what we hope to make. It takes that one step further and says, okay, now how does that impact our balance sheet? How does our revenue less our expenses build the equity in our business? And so it means it has to flow into a balance sheet. So pro forma financial statements are basically your income statement and your balance sheet projected over time. I find this is probably the hardest thing for businesses to put together when they come to talk to me or when they're going through mlenow.ca to get financing. One of the things that they're required, one of the things that a borrower is required to provide is a set of pro forma financial statements. What do you think your income statement and balance sheet are going to look like over the next 3 years? And business owners scratch their head and they really have a hard time with that because they're not very comfortable with how the balance sheet works. They know how their profit and loss statement works or their income statement, but they really come up short on trying to figure out how to get that information to flow now into the balance sheet. Every business needs pro forma financial statements, and the typical period is 2 to 3 years. You should have a line of sight as to what your business is going to do over the next 2 to 3 years, and that should be reflected in pro forma financial statements. What is the financial state of your business in years 1, 2, and 3, or in the next 1, 2, and 3 years? They paint a picture of what your business expects to do, and most importantly, if in doing the pro forma financial statements properly, what you're going to realize is how are we paying for the growth of our business? That's ultimately what a pro forma financial statement will show. How are we growing our business, or how are we maintaining our business from a cash perspective? Is the business generating enough cash to support itself over the next couple of years? Or, as most businesses experience, are we going to need an injection of cash at certain points? That injection of cash can be equity that the owners of the business put in. The injection of cash a lot of times in what we do every day at mlenow.ca is to help find some financing. So find 5-year or 7-year money that can be lent into the business to help it grow to get to the level that it needs to. But your pro forma cash flow statements answer this question. So if you're not going to prepare them because you think the bank needs them, by the way, that's a really valid reason for doing it, then do it for yourself. Because as a business owner, you should know how is the business going to pay its expenses as we grow into the future. Where is the cash coming from? Some businesses are in fact able to pay for their growth out of earnings. And so what will happen is a business will start out, they'll get to a place of where they're mature and their earnings are predictable, their revenue is predictable, their customers are predictable. But if they want to get to the next level, that typically doesn't happen from cash flow. They typically need new money to come into the business for a period of time until the business gets to the next level. And pro forma financial statements would help you understand what the implication is of that. Your in-house accounting team can definitely help you with this, but it might be a good idea to get your accountant who does your year-end financial statements to give you a bit of a head start. Maybe they can either give you a template to work with, a format to work with. Maybe they prepare them first for you in a draft form and then give them to your accounting team so that the accounting team in your business can then modify them and tweak them and figure out, okay, does this really reflect what our business plan says we're going to do and how we're going to pay for our growth? You should review them regularly, but at the end of the day, there's only one thing that you remember. Pro forma cash flow statements tell you how your business is going to pay for itself in the coming years.